20 some years ago, you were asking for $2,500.
Yeah.
And that covered a year of insurance.
Yep.
It covered funding the escrow account, closing costs, the appraisal, all of that stuff. Well, now it's $7,500.
Yeah.
It seems like.
Yeah. Hey everybody, welcome back to my channel. Ben Wheeler of EXP Realty in beautiful Northwest Wisconsin. Today I'm sitting with Al Nelson from CrossCountry Mortgage. Awesome local lender. We're just going to talk about some deals that have come Al's way and he's been able to save that another lender maybe wasn't going to be able to do it.
Yeah,
Al, I'll let you introduce yourself.
Hey, Al Nelson, CrossCountry Mortgage in Polk County, Wisconsin. Licensed in Minnesota and Wisconsin. So, yeah.
So tell me a story about when a client came to you or maybe another lender came to you and said, hey, this loan isn't going to close. Something went wrong in underwriting.
Can you get it done?
Can you get it done? Yeah. Is that something you get?
Yes, we get that often, and sometimes we can't get it done, and sometimes we can save them. We have many options, you know, with FHA, VA, USDA, conventional. Now we've got the DSCR loans for investment properties. We have bank statement programs. There's for self-employed borrowers, there's a 1099 program where we just look at the 1099 income. So we have many different options to save deals.
So you think when those loans come to you that are going to fall apart somewhere else, like what's usually the cause or why is it falling apart?
It could be a local bank that thought they could get it done and then something showed up that they didn't know about.
Like a credit thing?
Could be a credit thing, could be a payment they didn't know about. You know, sometimes stuff shows up that they missed or just didn't know about.
Sure, it wasn't disclosed up front, something like that. And then you're going through underwriting or something like that. You're like,
it shows up.
What is this?
Yeah.
And then, interesting.
Yeah. And that's where a lot of the local banks maybe don't have FHA, and FHA lets you stretch the debt to income, or then we can sometimes save it with an FHA loan.
What else the debt did come on the FHA loans? Just for curiosity.
If with decent credit, they could probably go to 55% on the back end.
Sure.
Yeah.
Okay.
Yep.
We were talking earlier. We were mentioning credit has become more expensive to pull.
Yes.
Right.
Yeah.
So does that play into anything like as far as the loans these days, or is just kind of another cost that you have to accrue?
Yeah. It's just as you. A lot of times we ask the seller to pay closing costs.
Sure.
And I can remember what seems like yesterday, 20 some years ago, you were asking for $2,500.
Yeah.
And that covered a year of insurance.
Yep.
It covered funding the escrow account, closing costs, the appraisal, all of that stuff. Well, now it's $7,500.
Yeah.
It seems like.
Yeah, it is gone up significant.
Yeah, it just costs a lot. Appraisals are $600 typically now.
Sure. And I see that on the real estate side of things, where sellers, maybe they were okay with post 2,500 back a few years back, but now if someone's asking for 5,000 or 10,000 sometimes, then they're like, I don't want to do that unless you make the deal better, sweeter in our favor. Which so we try to work it into the contract somehow, so it's better for the seller and the buyer.
Yes.
So it's definitely so lending kind of overall. Has gone along with everything and just kind of increase in price.
We try to prep the buyer. Yes, sir. You can ask the seller to pay your closing costs, but understand that seller has a bottom line.
Yeah.
And if your closing costs bring them under their bottom line, you're going to have to offer more.
Right.
And so we prep them for that.
That's a good thing.
Yeah.
Especially when they're asking for the closing costs.
Right. Yeah.
And a lot of times they don't even know what the closing costs are going to be until they really start looking into their loan program.
Yeah.
So it's good to have a lender who's going to disclose all that stuff right up front. So nobody likes surprises, especially in real estate.
Yes.
With fees and stuff. So get a lender who's going to be upfront with all the price or all the costs and stuff. That's the best thing you could do.
One thing we do that I learned years ago is when Ben sends me a borrower that's looking at 401 Polk Avenue or whatever the address is, I look, before I send out that pre-approval letter, I look for property.
Sure.
To know, is it reusable? Maybe it's in tough shape.
Right.
Maybe it's a manufactured home. Maybe, we want to, I look up how much the taxes are because that's part of your payment, part of the qualification. So yeah,
And taxes are a real thing too. I mean,
Yeah.
if you're in a municipality, like in the city or, in St. Croix Falls, Emery, Balsam Lake, Milltown, taxes are going to be significantly higher than if you're out of the townships.
yes.
That's
Yeah.
something to really keep an eye on when you're buying, because that's going to play into your payments because you're escrowing. Usually
Yes.
you're escrowing that money.
Yeah. Even if you're not escrowing, we still count the taxes and insurance as
Sure.
part of your payment for debt to income ratios.
Right.
We have to count them regardless.
So make sure to look at your tax roll and the type of property that may or may not fit with what loan program you're going with.
Yep.
Yeah. All great stuff. We're going to cut it out here.
Yes.
Thank you everyone for watching. Have a great day.
Thank you.